I guess Parker might jump in at any moment. I suppose,
Yeah,
possibly.
excellent, excellent.
Yeah, he
Uh,
might. He might. He might. Okay.
so what I was referring to before, I was thinking, there's a whole lot of similarities between Elon Musk and Willy Wonka, if you really think about it. I don't think he would. I don't think Wonka would have let the Oompa
The
Loompas
Oompa, yeah,
unionize.
I was gonna say he definitely wouldn't let them unionize.
They're like
However,
swimming
I
in the
can,
chocolate factory. They're going down the river
yeah,
with no seatbelts. Like that.
right, exactly. I mean, I could actually, now that I'm wondering about it, I'm really thinking, people were pretty impressed with Elon Musk's rockets' ability to land themselves. Let me just tell you some. I'm not entirely convinced they landed themselves. I think there might have been an Oompa Loompa or two manning the controls, and they were small enough to avoid detection. So you're not, so you know what I mean. So those
Yep,
rockets are pretty
yep,
small,
yep,
small,
yep.
just large enough to put an Oompa Loompa in there to man those controls, and then be like, oh, look at look, I told you I'm from South Africa, and I have rockets that land themselves. Yeah, okay, buddy. Whatever,
It's,
buddy.
it's the Oompa Loompas.
The Oompa
All right,
Loompas.
guys, welcome back to the Daily Candle. Brought to you by Higgsfield Industries. I appreciate it. Uh, Low key shout out too. We got merch in the shop, so if you want to get it, it's going to be in the link in the description to support the channel. Appreciate it. Thank you so much. Uh, so today, I was thinking last night about how did we get into this situation with the banking crisis? And there's a lot going on, and there's a lot of people that probably don't understand how we got to where we are, why. Uh, it's a really interesting story. So I was, what do you think was the first catalyst of all this? Because I was thinking that it was the dropping of the regulation standards for the fractional banking system, like bringing it down to zero.
So I think that is absolutely a factor. However, I'm not sure. I don't know. That might have been the first domino, but the only thing I'm thinking, the only counterpoint to that might be that they were already at like a 5% requirement anyway. Like, like at that point, it's like, I mean, if they had been at like a 90% requirement, and then the Fed was like, oh yeah, sure, government was like, yeah, sure, you don't need any reserve requirements at all, that might have been the first catalyst. But since they were already like something, like it was something ridiculous, it was like 10% or
Yeah,
5%. It was something stupid already. So
yeah.
they were already playing silly games with that amount of money that was not uninsured, not backed, not reserved, not nothing. So it could have been the last domino. I don't know. But yeah, I think the reserve banking was already ridiculous, and I think we can also like think back 2000, because when did they even put that in? When did they put that in? They say, oh, you don't need any reserve requirements at all. When was that put in?
I'm pretty sure it was 2020. It was either 2019, like late
Hmm.
2019, or 2020 when they decided to loosen the
Hmm.
standards because of the
Because of the
panning.
you know what,
Yeah,
that because because of the thing,
the thing.
as Maverick would say, the thing.
So,
uh, yeah, could be,
so what
could
what I
be.
was thinking was like because of that, for those that don't know about the fractional reserve banking system, essentially, if to create money, to create inflation, we take out debt. So the regular people, whoever they may be, takes out loans, and that creates dollars. And then when you get a hold of those dollars, you can deposit it into another bank. And then they're supposed to hold on to 10% of whatever you deposit, and then they can loan out the rest. And it goes like that down a chain where it goes a dollar, 90 cents, 80 cents, 70 cents. So a dollar turns into eight, nine, $10 within the banking system, really, after it's hypothecated a dozen times. I don't actually think that there's a limit to how many times they can rehypothecate the same dollar. I know some people have rehypothecated it like 25 times. So $1 can
A-
go a very long way.
And by rehypothecated, he means lend out the same dollar again and
Yeah,
again and again and
yeah.
again, so that now 10 people are owing this dollar, this same dollar. Then there's only one, but 10 people owe it, and now there's $10 that needs to be paid back from one bloody dollar.
Hence,
So
hence the
yeah.
trillions and derivatives that we were talking about last week. You can catch up on the last episode. That was actually a really good segue to visit
Hmm.
last episodes. It was a
Hmm.
really good one, so check it out if you want to.
It was.
Um, but yeah, so I was thinking about that, and there's a piece of tinfoil where it's like there's no possible way that the Federal Reserve did not see any of this like banking problems coming if they were to rapidly raise interest rates
Mm.
after all of these rehypothecations from
Yeah.
So I think the system is much safer and much sounder. And as I mentioned, we're doing a lot more to try to look for financial stability risks that may not be immediately apparent, but to look in corners of the financial system that are not subject to regulation outside those areas in order to try to detect threats to financial stability that may be emerging. So would I say there will never, ever be another financial crisis? You know, probably that would be going too far, but I do think we're much safer, and I hope that it will not be in our lifetimes, and I don't believe it will be.
all of
Let
these
me. I was
treasury bills and whatnot
Let
and
me
all of
chime in
this
real
debt.
quick. Let me chime in real quick. I can think of this even in terms of just pure logic. Like, well, that's a great point. I want to chime in real fast, and I'll let you keep going. But yeah, the moment you just said that, I had a little light bulb go off in my head, and you're 100% right. I don't know if people saw, but at it was either at the FOMC meeting. I think it was at the last FOMC meeting or press conference or whatever, the presser. Someone straight up asked Jay Powell. Jerome Powell, for those of you, the Federal Reserve Banking Chairman, for those of you who are new, they asked him, did regulators know anything about this? Did you know anything about this? And he straight up denied everything. He said, which of course he would, clearly. But I was just thinking, you just made a great point. There is literally no way that the Fed didn't see this coming because they literally took the reserve requirements down to zero and then they literally began to raise interest rates. There is literally no way they didn't see this coming. Just mathematically, they didn't. There's no way. Never
I
mind
mean,
the yeah.
there was years in between the dropping of the requirements and then the raising of the interest rates.
Sure. I'm not saying that listen. Listen. I don't have a crystal ball either. I'm slated to go mug Miss Cleo next Friday, but until that point in time, I don't think JPO has her crystal ball either. I don't know if he knew exactly the date it was going to happen, but they knew for sure that when they reduced those reserve requirements to zero, and then they began tightening financial conditions or attempting to raising interest rates. They knew that at a certain point after that, sometime within the near future after that, they knew something was going to happen. You cannot say to the banks, go, my little darlings, have fun, lend, loan, prosper, and then also start jacking up the rates on the bonds that you know that they buy because you know this, and that like, yeah, you made a great point that there's no way that the Fed didn't know something was coming. That's
So
true.
let's go back and let's explain to everybody because I've gotten the story pretty much down packed. So
Do it.
let's go back to the beginning and see if we can work our way through the story in chronological order. So they drop the reserve requirements and they give all of these people stimulus over the panty. And banks have this requirement where they can't keep an X amount of funds inside of their coffers because they get fined for it. So what they
Hmm.
do is they purchase a bunch of assets, whether it be hard or treasury bills, or they reverse repo it. Is it reverse or just the regular repo? I think it's the regular
Might might
repo.
be the repo, yeah.
Yeah. So
Just to chime in real quick, one addendum. They buy. I found this out. They buy very few hard assets. The lion's share of it is paper. It's
it's paper,
bonds.
it's
It's
bills.
loans.
Yeah.
Yeah, it's very. They do buy some. Like they will buy some commodities, depending on which bank. They will buy some things that are quote unquote hard and real, but the vast majority of it is all just paper. But keep going.
Yeah. So let's talk about that. So what happened when the banks have all of this money in their coffers and they're unable to actually keep it on them? So the penny comes, they plow interest rates to zero, and all of the banks are forced to do something with their money. So what do? They purchase 3, 6, 12-month treasury bills, some of them even up to 2 years. They put short-term treasury bills of all of our deposits into those. And after a while, they kept buying it and kept buying it. And of course, the interest rates are staying low because of whether they are being purchased so much by the banks with the excess deposits that it's keeping the rates low, or whether it's because the Federal Reserve has their foot to the floor saying bare minimum low interest rates for X amount of years, whatever it was. We had it for a very long time. So the banks are forced to give up this cash and purchase these bills and lock up the capital. So now the penny comes out, and we are dealing now with rising inflation that the Federal Reserve knew that was going to happen because they were asking for it in a Bernanke speech about 20 years ago. He said that they were going to create inflation specifically, and that they were going to make it last for a while intentionally to get past that 2% and average it out over a certain amount of time. But nobody knew how
Right.
they were going to do it.
Right. Let me chime in real quick, just for people who are new. The idea is allegedly,
Allegedly.
allegedly, the Federal Reserve wants to maintain will use its policy to maintain an inflation rate of about 2% per year, as close as whatever 1.9, 2.1, whatever. Percent per year. Now, of course, any of us living in reality, we know that it's a funny thing, but ostensibly, allegedly, interest rates and inflation has been going down for like the last 20 or 30 years, and they have and it's a funny thing, but that's how they measure it. Inflation has been going down, so by their measurements they say, okay, we've been at like 1.5, even damn near zero inflation, even disinflation, depending on how you measure it. So they're saying, okay, this has been going on for too long. We need I think the exact words, it was either Alan Greenspan or Ben Bernanke who said, we are looking for we are looking to let inflation run hot for an extended period of time until we get the average inflation rate back to 2%. So, what does an extended period of time mean? Nobody knows. But that is how they're looking at it. Now, is this reality? Maybe not, but that's how they measure it. That's how they look at it. So that's why it's funny, because Jerome Powell was saying up there, he was going up for months. If anyone watched the meetings in late 2020 and all through 2021 for most of the year, oh
It's
well, we believe
transitory.
inflation is transitory, which is really, now that I'm thinking about it, wild to me, because the Federal Reserve literally has said we are looking to force inflation for an extended period of time, which is in my books the opposite of transitory. It's funny that we're talking about this. Is all kind of starting to make sense to me now, how insane that is.
So
That
this
he's
is kind of why I wanted to talk about this, because
Yeah,
the
this is
whole
starting to
thing is
yeah, this
very,
is
very
starting
interesting now that we have the
yeah,
perception of 2020 vision, and now we can kind of we look back and
that
it's
is
like,
wild to me,
how in the
actually,
hell
now that
did
I'm
it?
thinking about this.
Right.
Yeah.
So
That is
so
crazy. Keep going.
let's go back to this. So back to the story of they buy the bills, and the eventually inflation gets so hot that they are now going to have to raise interest rates. There is no possible way, in my mind, allegedly, that they could have asked, or they have stated that they wanted inflation, then believed the inflation that they got was transitory, and then did
Yeah.
not plan for the fact that the inflation that they wanted, that they said is transitory, they didn't plan for the raising of the interest rates and the purchasing of all of the bills throughout all of this time by the banks. There's a lot there's a quote where it's like there's a fine line between stupid and evil. But when there's so many coincidences of like, how many times do you have to be stupid to be like, this is intentional, allegedly. This is intentional.
Allegedly.
Like, there's too many stupid mistakes over and over and over again for this not to be allegedly completely intentional. They're
Yeah.
too smart. There's like hundreds of PhDs between these people, and we can put this together in
Yeah.
a coherent story that so far makes no sense. Doesn't make any
Allegedly.
sense to me. Allegedly.
It's funny. I'm
Google, I'm
just thinking,
sorry.
like, yeah. I'm sorry, Susan Wojcicki. I'm sorry.
Hello,
Oh
devil.
no, she stepped. Yeah, hello NSA, hello CIA. Uh, it's funny though. Like, it's funny now that I'm talking about now that we're talking about this out loud. I'm realizing how how insane that was. It's funny.
Yeah.
I'm sorry. I'm having a bit of a moment right now. I'm having a bit of an existential. I now that we're talking about this, I'm like, wait a minute, wait a minute, wait a minute. They literally said they want inflation to run hot for an extended period of time to average out again. I mean, again, anybody living in the real world has seen that the price of housing increase dramatically, the price of gas increased dramatically, the price of cars, the price of everything increased dramatically.
Yeah.
Yet they're saying inflation has been too low. So I just want to and just a quick side note, I don't want to get too lost in the weeds, but I'll say this. Higgs and I have talked about how difficult and weird it is to define inflation because everybody seems to have a different definition of it, and how it's so confusing. And what I'm starting to realize is there is inflation, and then there is inflation as measured by the Fed, and ne'er the twain shall meet. And that's what I'm starting to realize is a cause of a lot of the confusion. Because if you listen to Ben Bernanke and Alan Greenspan, we have been in a state of disinflation for ages, decades actually. But
Mhm.
if you live in the real world, you're going, everything's more expensive now, and my dollar buys less. That's inflation. So the more I'm realizing, huh, Higgs, how deep do you want to get into the tinfoil here? Because I'm starting to like, I don't know, man. Because Maverick, so I listened to
Welcome
some,
to
just
Tin
FYI.
Talk. Thoughts
Welcome
worth
to
banning.
Yeah, that's right. That's right. Thoughts worth banning. Because I'm sorry. I'm sorry. I'm just having a bit of a moment. Like Jerome Powell sat there and with a straight face for like what 9 months, God knows how long. Well, we believe inflation is transitory. Well, we believe inflation is transitory. This inflation is transitory, and I'm going like now, especially after you mentioned that bit about Bernanke and all that. I'm like, wait a minute. I think allegedly Jay Powell was lying through his teeth, allegedly, and I think he knew. It's funny. I listen. Maverick
I,
says he thinks that the Federal Reserve is incompetent and Jerome Powell is a psychopath. He's an incompetence, all that. But now I'm starting. You just said what you just said, literally what you just said. There's a fine line between stupid and evil, and I think I'm having to realize that actually, as much as I love Maverick, I think he is 100% wrong about this.
I
I think
genuinely
this
think that
is
they just
I
lie over and over
I
again.
think I think they're doing everything intentionally. I think they are breaking the system intentionally, allegedly. And I think
Allegedly.
that allegedly, this is just what I think. I have no proof. This is
It's
just these
just
are
my
my
opinion,
allegation.
man.
This is just like my
Let
opinion,
them
man.
cook.
Yeah, but wow. Yeah, there's a fine line between stupid and evil. The banality of evil only goes so far. At a
It,
certain point, it becomes premeditated and intentional. Allegedly.
and we're just scratching the surface here of like these thoughts that I've been having. So if we go back, so they raised rates fastest than they've ever had in the past 12 months. This is the most violent they have ever raised rates. And throughout this time, people don't the average person doesn't know this. So twice a year, at the beginning of the year and at the middle of the year, they have stress tests on the banks, and they do tests like simulations of how much it would take for a bank to fail, if there's a run on the bank, or if they would need capital injections, what they would need to do to solve it. And for the past 3 years, or since 2019, uh, the banking committee, that the simulations that they run, every time they say they pass. They're all
That's
good
true. They all pass with flying colors, I
with
believe, was
flying
the exact
colors.
terminology there. Yeah,
That's what
so
they say. But if you
that's what
look at
they
the
say.
reports, now this is what's really fucking interesting, because for
Watch
those
your
of you
mouth,
that don't,
mister.
I know language. For those that don't
like,
know, I'm a
like,
real estate agent in Massachusetts. So I was talking to a loan officer the other day, and he was saying that there's no systematic threat to any of the bigger banks. Even when I brought up the fact, like I looked at him and I was like, all the banks are insolvent, right? Like everybody knows that. Like Bank of America is like 1 in 117 in
yeah, leveraged or something.
leverage.
Yeah,
So it's like
that's
there's no
right.
possible way that through all of their assets, they couldn't even sell all of their assets to cover even a
Yeah,
fraction of what they deserve.
right.
And he's like, he looked at me confused. He's like, "What do you mean that they're all insolvent? They're fine." And I'm like,
Uh,
does the public really not understand that every time that they say they're fine, like over the course of the past 2 weeks, as the banks have been collapsing, I've had more people in my face and on my television and on the radio state everything is
everything
fine.
is
And I
fine.
don't know about you, but every single time that they say it's fine over and over again, I get this slight feeling that things are not fine.
Yeah,
I just first wanted to start with just a quick question to the three of you, because I've been troubled by the word of the use crisis. I know I shared that with a ranking member the other day, that, I never saw this as a crisis. Perhaps it was a boo-boo, maybe a major boo-boo, but not a crisis. I don't think that, personally, that the two bank failures equals a crisis. So I just want to quickly ask each one of you just a yes or no. Do you think this is a crisis, Mr. Barr?
As I said at the outset, I think our system is sound and resilient.
Is it a crisis or a yes or no?
I think that it was appropriate use of the systemic risk exception to prevent a crisis.
Is it a crisis, yes or no?
As I said, I think that where we are now, the banking system is sound and resilient. There was risk that if we did not invoke the systemic
But would
risk
you have
exception,
used the
it
word
could have led-
crisis is the question.
I have not used that word.
Okay. Chairman Greenberg?
I think we were at risk of crisis, and I think the actions that we took have stabilized the system.
Ms. Yang?
I agree with that. The actions we took stabilized the system.
Well, I think you're right, and
Like
it's
they're saying it
interesting.
a little too much.
It's so interesting because it's wild. Of course, everything you're saying, I agree with, obviously, but there is the wild possibility that things might actually be fine, but be fine. How do I put this? Okay, that's not exactly what I mean. There is no, everything is not fine. Everything is not fine, Higgs, and you and I both know
I
this.
was like, two
But,
of the biggest
but
banks failed in less than 72 hours. If
yes,
that's
yes,
fine,
yes.
what does in the shithole look like?
You're right, right, right.
Like,
Phrasing. But no. But here's the thing about that. There is a possibility, and this is okay. There is a possibility that things might actually be fine for the short term, and they're only fine because of. And again, this is definitely something the public doesn't know. That I mean, America is basically in a roundabout way socializing the banks. They
oh,
and
100%.
most people, and I mean, like for example, again, now this is
Hold
definitely
on, hold on.
allegedly.
I need to get my tinfoil hat. Okay, here we go.
Ah, yes. Okay, there you go.
Okay.
Well, now hold
Yes.
on. This is not allegedly now. Okay,
They're
hold
from
on.
1%. All right, calm down, fucking Bernie.
Bernie. For example, there are a lot of rumors, and these are just alleged rumors, but a lot of bigwigs were talking to the Oracle of Omaha just recently.
Yep.
They were having, and there are this isn't, obviously this is allegedly, but I have it on relatively good authority that I heard, a little birdie told me that they were talking to him specifically, basically saying, again, allegedly, "Hey Warren, are you in the market for some banks? Because we got a fire sale on banks. And listen,
Yeah,
this is one of those
they were
fly."
looking at Warren to bail out the banks again, just like in
So,
2008.
so in a roundabout way, allegedly. they're trying to socialize the banks because the government is coming. Basically, the government apparently, allegedly, was going to the Oracle of Omaha and saying, "Hey, you want to get in bed with us and like literally bail out these banks and then become like a bankster oligarch?" And now, of course, I have no idea whether or not that's actually what was said. I have no idea, and if that was said, I have no idea what the Oracle of Omaha's answer would be. But there is a lot of circumstantial evidence, allegedly, that the government is trying to socialize, nationalize the banks.
So we're gonna put a pin in that, because that we're gonna
Mm-hmm.
get back to that. We're gonna get back to that
Yes,
towards the
yes,
end.
sir. Yes,
So
sir.
what now that we've discussed how we got here and the problems that had to arise in order to get into this situation, where are we now? So banks are starting to collapse, and most people are probably wondering the question, why? So here's what's happening.
Mm,
Interest rates of the bonds and the price of the bonds are oppositely correlated, so inversely correlated. So if the interest rates go down, the price of the bonds go up. So what happened during the pandemic? So the Federal Reserve puts the interest rates to the floor and the price of the bonds skyrocket. We saw that. I'm going to pop up a chart. So you can do that with TLT. They used a emergency rate cut to cut the interest rates, and the price of TLT skyrocketed. I'm not an investment advisor. Don't listen to anything I say. I have no idea what I'm talking about. I'm just an idiot on the internet. Thank you. Have a wonderful day. So what happens is when it's reversely the correlated, you get to buy all of those bonds for a higher price with a lower return on interest. So the banks had to go and buy those bills for 3 months, 6 months, 12, 2 years, whatever it is, to get all of those extra depositors from the stimmies off of their off of their balance sheets, so they didn't get fined extra money. They don't want to get fined. So they'll
right.
buy all of these bills. We are now slowly coming out of the panty, and we're slowly coming out of the crisis that we had a little while. I don't think I should say that word, actually. Never mind.
You should call it the thing.
The cry. The big cry. Yeah, no,
The thing.
yeah. So, fucking love Maverick.
I
Don't
do
distract me.
too.
I'm trying to be on a roll here, and I'm trying to consolidate this
I'm
for
sorry.
time.
I'm sorry. I'm sorry. I'm
So
sorry.
what happened is now they're raising interest rates at the fastest way possible that they've ever done in the course of X amount of years. I don't think it's ever been done this fast ever, besides from like Volcker going from
0 to
14 to 20.
15% in
Yeah,
3 minutes.
whatever the
Yeah.
fuck it was. In fucking 2.5 minutes flat. Yeah. So
Yeah.
what happened was all of these banks have an enormous amount of bills, T-bills, that they overpaid for, that they're getting a bad return on investment on. And the Federal Reserve is now raising interest rates, and the price of those bills are coming down because of their inverse correlation. So that's not necessarily a bad problem. The banks can wait and sit on those treasury bills, because the way that they work is at the end of the due date,
Cycle.
the
Yeah.
expiration, whether it's 3 months, 6 months, 12, 2 years, whatever you bought the treasury bill for, you get the money that you invested in back from the treasury bill. So that's
Plus
holding
interest.
plus the interest that you got over this course of time of giving the money out. So in theory, all the banks would have to do is wait the allotted amount of time that they lock their cash up for, and then they get the money back, and now it's back on their balance sheet, and now the interest rates are higher. They can rehypothecate all of that money, repurchase more treasury bills for a higher interest rate, and no one was the wiser. The banks got away with going through the panty and the big cry, the thing, without having any trouble. They got their interest rates, they got all of their depositors' money back, and now that they can reinvest in treasury bills in 2023, 2024, 2025 at a higher interest rate. Excellent. Except, now here's the speed bump. Now here's the fucking cat that ran out into the middle of the fucking road and got. So what
You are
happened
so
now?
demonetized.
I know. I didn't say anything.
Sorry.
They pet the cat violently, is what I'm saying.
Yeah,
The
yeah,
cat
yeah.
didn't get hit by the car. It just
Yeah,
got
yeah.
pet by a 3,000-pound vehicle very fast.
It was actually we here at the Federal Reserve. We're trying out a new method of shiatsu massage. Sorry, keep going.
So
Uh,
so the what they should have done on these bank stress tests was they should have known how much money it would have taken for all of these treasury bills that are underwater, and all of the fact that all of these banks have zero reserves in their system. They should have been able to calculate how much money depositors would have to take out of their banks in order to create a threat where the banks would have to sell their bonds for a loss to give the depositors back their money, and it should be a threat to the bank's stability.
2 days later.
The Federal Reserve was supposed to be the primary supervisor over Silicon Valley Bank, but from all we've seen and heard today, they failed to do their job, and it's been reported that Silicon Valley's bank risk practices were on the Federal Reserve's radar. We've talked about that for over a year. In 2022 alone, Fed supervisors issued 3 findings on SFB's ineffective board oversight, weakness in their risk management, and flaws with the bank's internal audit function. So it should raise major concerns that the Federal Reserve, who is tasked with regulating and overseeing banks, knew about Silicon Valley's risky practices far more than a year and failed to take any corrective action. Now, Mr. Barr, what actions, if any, did the Federal Reserve take, and you talked a little bit about this, after issuing those risk findings, and how did the Fed Reserve become so complacent on its supervisory role and miss these warning signs? And I think that's what people across America really want to know.
Thank you very much for the question. My understanding is that the supervisors identified the issues, they brought them to management's attention. The response clearly was not an effective response. Bank managers failed to manage the firm in an appropriate way. They didn't manage their interest rate risk and their liquidity risk well, even though it was pointed out by the regulators. And I do think it calls for a heightened need for more aggressive supervisory action to take care of these problems.
But you all missed it too.
I'm sorry?
You missed it too.
The supervisory staff were aware of the underlying issues. I think all of us were caught incredibly off guard by the massive bank run that occurred when it did on March 9th and 10th. The scale and speed of that, $42 billion going out the door Thursday afternoon. It was expected by the bank that $100 billion more would go out the next day. That's just an extraordinary scale and speed of a run that not anything I had ever seen before.
Okay, out of all the banking supervisors, I would expect the Federal Reserve, and most of us would, to be the most aware of the impacts increased with rate hikes would have on the value of securities for banks. However, the Fed has stress tests, which we've talked about, which are conducted to determine how large domestic banks would perform under hypothetical and stable economic scenarios, currently does not test for the problems that caused Silicon Valley Bank to fail. SFB failed because of inflation, rapid increases in interest rates, and a loss in value of government bonds. So even if SFB had been subject to testing, it would not have led to the changes that could have prevented their failure, because the Federal Reserve is asking the wrong questions and not running scenarios that ultimately led to SFB's downfall. So real quick, Mr. Barr, how can the American people trust the Federal Reserve if you are not testing for all scenarios? How was the Federal Reserve so far off? That is a question that everyone asks again.
I think that the Federal Reserve should use multiple scenarios. That's one of the reasons why I proposed that for this year's test. It includes a rising interest rate environment for the trading book. Yeah. I think multiple scenarios makes a ton of sense and should be done.
You know, that saying, they can get it right 100 times. You got to get it right once. So you got one crack at it. So thank you very much.
Gentleman's time has expired.
Allegedly, there is no possible way that they have passed with flying colors if the bank can. I get a digital run on the bank hasn't happened ever. This is like a new phenomenon. We've never seen a digital run on the bank where a bunch of people can click a few buttons and magically $500 billion has just moved from one bank to another. That's brand new. We actually used to, back in the day, have to wait in line in the snow both ways, walk to the bank and actually carry our money around with us. But not anymore. We live in modern days. We'll get back to that in a little bit towards the end.
Um,
So how they passed with flying colors for the bank stress test is incredible. But besides that, again, very convenient stupidity lapse of judgment, these there was a run on the bank because people wanted their cash. People got afraid. It stems back to Billy Huang going in the Huang direction, and the collapse of FTX with
Archegos.
the crypto fund and
Yeah, yeah,
Archegos.
FTS,
A
yes.
couple years ago, this all stems back from problem. Like, I'm going to post all this on the screen, by the way. I'm going to try to find all of the articles, but all of these bigger crypto firms had gone bankrupt, and now people are looking for their money because interest rates are rising. They need to be able to pay their bills. Whatever the excuse is that they had to take their money out of SVB when Silicon Valley
Yeah, I
collapsed.
was wondering what actually was the
Nobody
progenitor of that, but nobody
nobody
really
talk
knows.
yeah, nobody really talks about why there was a run on the bank.
Yeah,
So
but whatever it was something,
it
and then
spooked a
it
shit ton of
almost, yeah,
people.
it doesn't technically, yeah, it's an interesting. I'm not sure what exactly caused that digital run on the banks. That has never happened before. I mean, you could point to Evergrande going belly up. You could point to FTX, Archegos. Who knows? But yeah, I was just realizing I don't actually know exactly what caused the run on the banks, but all I do know is that it did happen, and
We're
it's
thinking
interesting.
here.
It happened at
We're cooking.
interesting. We're cooking. It happened now that I'm thinking about it. Again, a little bit tinfoil. I'm not. And listen, anybody listening to this podcast, you can do with this information what you will. But it
This
is
is not
interesting.
investment advice.
No, it's not. No, they're not at all. But it's just interesting. You said something to me just now. You just said, gosh, what did you just say? You said about this a digital run on the banks has never happened before. And I'm going, huh, true. That has never happened before. Now, of course, that doesn't mean it can't happen, but I was just thinking, what an inopportune moment for a digital run on the banks to happen, something that
I
never happened before.
I
Listen, I'm
wonder
just
if there's
asking
something coming
questions.
out. I wonder if there's something coming out
I'm,
soon that might
I'm just,
prevent digital runs on banks.
listen,
Who knows?
I'm just
Who
asking questions.
knows?
I'm just asking questions. I mean, listen, who knows? What I'm looking at is I'm thinking there might be a use case for a centralized currency that might prevent a
Crazy talk.
centralized
Crazy
I listen,
talk. I
I'm
don't
just
know
look
what
look
you're talking about.
look, I listen, I'm spitballing here, Booby. All I'm saying is that it's so interesting that this thing that has never yet happened before happened at the most inopportune moment possible to cause a digital run on the banks. And now, my goodness, it's funny. Here's
Who
my thought.
knows?
It's interesting. It is interesting. It's interesting. I believe in coincidences. Coincidences happen every day, but I don't trust coincidences. Now, bonus points for anybody who knows who said that and where that's from. But my thing
Stay
is,
on
it's so
track. You only
interesting.
got so much time.
Yeah. I'm just saying, it's interesting that yeah, this thing happened that has never
It's
happened before. And
it's crazy. All
my
right.
God,
So,
what a time. Keep going.
what a time. So where are we? Where are we? Uh, the
Oh well, the bank
run on
runs. Yeah.
the run on the bank happens,
Yes.
and suddenly, because SVB has zero reserve requirements and there's no money in their system, and now they are underwater on treasury bills that they weren't underwater on 6 months or 12 months ago. They have to sell all of these treasury bills for a loss and give the depositors back their money. Now, SVB is, I think the last time that I looked, I hope that I don't get the stat wrong. I'll pop it up if I'm wrong. I apologize. But I think it's they fund and hold the capital for like 50% of the United States tech startups. It's a very large amount of all of the tech startups in America.
This was SVB, right?
Yes. So if
Yeah.
they fail,
16th largest bank in America
yep.
by what market cap or by holdings or whatever. It
Yeah,
was a big one.
so let's before I continue, 16th largest bank, guarantee you they went through a stress test. This
Oh,
isn't
of
like some
course it is.
obscure 132nd
Yeah,
bank in
no, no,
America
no.
that nobody pays attention
No, no,
to.
no, 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 no.
This
This was
holds
not this.
all of the
Nah,
fucking
nah, nah.
funds
No,
for
this
all
was
of the
not
tech
this was not
startups.
the Billings, Montana Credit Union.
No,
Hey, no
no.
disrespect to Billings, Montana. I've actually seen that place, really nice. But you guys are not exactly New York City.
They're
You're
not on the
listen,
map.
yes,
Yeah.
you're not on the
So
map exactly. Well, you are,
these
but you got to look
guys
real close.
had to have gone through a test.
There's
Had to have.
literally no way they did not. Well, actually, you know what? I know what I'm going to say. Allegedly, but also not allegedly. I'll put it this way: if they didn't go through a stress test, then people need to be fired and people need to go to jail. If they didn't, because
So
that is beyond insane.
The Fed has stress tests, which we've talked about, which are conducted to determine how large domestic banks would perform under hypothetical and stable economic scenarios, currently does not test for the problems that caused Silicon Valley Bank to fail. SFB failed because of inflation, rapid increases in interest rates, and loss in value of government bonds. So even if SFB had been subject to testing, it would not have led to the changes that could have prevented their failure because the Federal Reserve is asking the wrong questions and not running scenarios that ultimately led to SFB's downfall. So we'll correct Mr. Barr. How can the American people trust the Federal Reserve if you are not testing for all scenarios? How was the Federal Reserve so far off? That is a question that everyone asks again.
I think that the Federal Reserve should use multiple scenarios. That's one of the reasons why I proposed that for this year's test. It includes a rising interest rate environment for the trading book. I think multiple scenarios makes a ton of sense and should be done.
here's my tinfoil for this statement, and we're gonna go right past it. We're gonna move right past it because I don't want to get into it.
Mm.
If there's so much stupidity that they missed all of these specific like kinks in the fence for all of these banks that might actually be insolvent and might go under if there was a bank run, my tin is I wonder if the bank stress tests weren't meant to find the strongest banks,
They were
but
meant
to
to
find
find
the
the
weakest
weakest.
banks. I'm not getting into that tin.
Yikers!
I'm not getting into that.
Woo!
But there is
You are that shrimp coconut curry must have been spicy. Oh, oh, oh! You woo! I'm getting some secondhand, dude. Forget secondhand smoke. I'm getting some secondhand spice over here. God damn! Keep going.
So let's move past that.
Let's table that for now.
That's a whole different talk. We're gonna have to branch that off
Oh
into a whole different
my
fucking platform in
goodness
order to talk about
gracious!
this.
Yeah, yeah. Okay. Alleged,
Allegedly.
allegedly,
All
allegedly.
right, so the run on the bank happens. They sell they sell the T-bills for a loss. They go under because they can't afford to actually pay all of the creditors,
Right.
all of that. So now the Treasury has to come in, and the federal government has to come in, and the Federal Reserve has to come in, and they have to say, listen, everybody that is insured, that is not insured, over $250,000 has now become whole. Please, God, do not take your money out of the banks. And that sparks fear. So normally the first thing that the Federal Reserve does, the government does not fix the problem. It
Right.
just exacerbates it. So what does everybody
Fix
else
the
do?
can.
Yes. So what does everybody else do? They panic. Now there's banks all around the country that are having depositors take their money out and put it into bigger banks. They put it into two different kind of banks. Either banks that are too big to fail, that the government won't let fail, or they're small enough where they cause systematic risk to the overall rippling through the financial system where they have to be saved as well. So you can pick two different kind of banks. The credit unions that are so deeply in shit that they need to be saved or else they'll cause a whole shit ton of problems, or big banks that are too big to fail that the government won't let fail anyways. Every other bank is up shit's creek without a paddle. And through the last FOMC meeting, that's what Janet Yellen was grilled about and admitted. So you're either in a bank doing so bad they need to get bailed out, or so big that they need to get bailed out. Everybody else is
Although,
everybody else is getting their money taken out of the system
see,
and moving it somewhere else.
Here's the thing. Even those smaller banks that quote unquote need to be bailed out, again, I might even have to disagree with you a little bit. I don't think those are even remotely safe either, simply because when pressed on it, she said, "Well, the truth is we don't actually have enough money to make everybody whole. We can basically cover Silvergate Capital and Silicon Valley Bank. Please don't take your money out. The banking system is sound." She literally said
Yeah.
the banking system is sound.
So here's what they're waiting for. About a little earlier on in the video, I was discussing about strategies of how they got through the pandemic. All the banks would need to do is get through their time period of when they bought those bonds, whether it's 3, 6, 12, 24
Right.
months. If they can get through that time, though, that's the clock. If they can
Yeah.
get through the time and get their depositors' money
Then they
back
can
without
roll
going
over their
under,
debt.
boom, that's the
Well,
key. So all they need to do is trick everybody, or let me rephrase that. They need to convince the population that their money is safe. Sorry, I gotta take off the tinfoil hat. They have to convince everybody that their money is safe up until the point that the T-bills run out the clock and the banks can get the underwater cash back. Once they do that, they can rebalance their sheet, fucking wipe their hands clean of this fucking mess, and they're all good. They don't have to worry about it. They can get their depositors' money back if they have a mass amount of people looking for their money.
and so here's the thing. Like I said, things might actually be okay in the short term, because if
Yeah.
they can pull that off, well, then the banking system should not collapse.
So
If they can pull it off, if they can take a knee and run out the clock long enough so that those bills that they're underwater on can just run off their balance sheet. The banks meaning the banks that they bought those treasury bond, they bought the bonds, and then they receive their principal plus interest, get the cash back, and then go repurchase those same well the same
nobody would be the wiser.
Nobody would be the wires, as long as nobody needs to actually pull their money out, as long as people are happy to just keep their money in the banks, getting
So
0.003% interest. Hey,
so
all's
that
well.
leads us to solution number 2. What they did was they went to all of the bigger banks about a week ago and they said, "Listen, all of these smaller banks are getting decimated. They're getting vaporized because we're
Hmm.
freaking the people out. The more that we talk, the more that the people freak. And they're taking their collective money out of the smaller at-risk banks and they're putting it into the bigger
And the
banks
big
like Citi, JP Morgan,
Morgan, even
Wells
Bank of
Fargo, Bank
America.
of America. They're putting it in the big 6 banks. They're consolidating all, not the government, the people are willingly consolidating all of their money into the big 6 banks.
As
Wait.
you're saying that, keep
Wait,
going, keep
wait.
going, keep going, keep going, keep going.
All right. So, now solution number 2. The banks need to run out the clock, but the money was already moved from the smaller banks to the bigger banks. So that, check. I'm not going to tell you
Hmm.
who's checking off this list. I think you can put the pieces together. But on the checklist of get monies from small bank to big bank,
Big
check.
bank,
That's good.
check.
But now they need to run out the clock. So solution number 2 is take all of the money that was just taken out of the small banks and given to the big banks. The government will force, which is what they're doing, the big banks,
Allegedly.
allegedly. The deal goes like this. If you want to get bailed out in the next crisis, if anything were to happen to you, what you're going to
It'd
have
be
to
a
do.
shame if you didn't lend that money to the small banks. It'd be a shame.
So they take the money that was just taken from the small banks and deposited into the big banks' coffers, and they force the big banks to give the money back to the smaller banks as a loan to make them whole again, to starve off the catastrophe within the next 3 to 2 years.
To stave off
So,
the catastrophe. We're not starving just yet. But
sorry,
also, real quick,
exactly.
yeah.
So what you're seeing is, I'm hoping I'm doing like a pretty good job at visualizing this. They're just fucking moving the same money around, but regardless, the core money moved from small to big, and it's staying at the big banks, even though they're giving it back, because they're giving it back to the smaller banks as a
In the form of
loan.
a loan and
Regardless,
slash buyouts.
regardless, all of the money was consolidated into the 6 big banks.
Yeah, so let's make that clear. They're loaning this money to the small regional banks slash buying out the small regional banks, but on paper, on the books, that money is still owed to
Big
J.P.
banks
Morgan, Wells Fargo, Bank of America,
plus
etc.
interest.
Plus interest. So, like I said at the beginning, it could be the case
Can
that
I just
things are
state?
okay.
Can
Go.
I just state the T bills that they have on their balance sheet that they're trying to like keep afloat? Keep in mind
Uh-huh.
that when they get that money back from the T bills, regardless, they're still only getting 1% from those T bills. And JP Morgan and all of these other bigger banks are lending to those smaller banks
At
for,
higher
I'm sorry,
rates.
what the fuck is this interest rate right now?
Yeah.
It's
Yeah.
literally dooming them to fail
Yeah.
regardless.
Yeah. So again, that's a great freaking point. That is a great point, and that goes back to what I was going to say. It could be the case that this banking crisis is not so much of a crisis in the short term.
The big sad, the thing. It's a big
Mhm.
sad.
And I just want to clarify something. Higgs, you said that the government is forcing these big banks. Actually, I just want to clarify, and I'm
They're
sure
not
you'll agree with this.
forcing.
No, no, they're not. They're not. But let me clarify for anybody. Hello, devil. I want to clarify for anybody. The government is not forcing anybody to do anything. What the government is saying is, hey, J.P. Morgan, Bank of America, you big banks. Hey, listen, it would be really great if you guys could consider helping out your smaller counterparts, the regional banks, because they really need a hand. And we're all in this together. We're all Americans, and here's the thing. It would be a real shame if we were to ever have another banking crisis, a real one. It'd be a real shame if we had another Lehman Brothers moment, another Bear Stearns moment, and it would be a real shame, if listen, we all want to be on the same team here, right? We're Team America. We're Team America, and it would just be god awful if something were to happen that we couldn't find the funds to bail out your bank if things got squirrely in a banking crisis. That listen,
So
Janet Yellen herself said we're not going to see another one in our lifetime, so it's probably not going to happen. But look, we're just we're kind of in a counting heads phase right now. We just want to make sure that we're all pitching in, because it would be a shame if something were to go wrong with the accounting and there wouldn't be enough money for you, Bank of America,
so
or there wouldn't be enough money for you. It's just, hey, listen, we're just these hypotheticals here. But I tell you what, though, I'll tell you what, even if funds were a little bit short, if you were to step up, be the bigger man right now, step up and bail out those, or help give those loans, give them a sweetheart of a loan. That would go a long way to building a lot of good faith when everyone's competing for a limited amount of dollars. Hey, we're just saying.
so here's now what I'm thinking. If all of the money gets consolidated now, because everybody's going to keep, I think it's going to continue. So we're putting that on the record. I'm going to put my analyst hat on the line here and say this is going to
What's
continue.
what's going to continue specifically?
The people are going to continue moving their money from the smaller banks to the bigger banks for
Oh, so
safety.
the bank runs on the small banks are going to kind of continue.
It's
Gotcha.
going to continue. And I think this is what's going to happen. We know that this gets back to part 3. Sorry, I'm an idiot. 3, whatever the fuck, however you make that number. So
Who
part
holds up their middle finger and their ring finger that is? I'm gonna say next time someone asks for 2, I'm gonna do that. Then keep going. Sorry. Sorry, keep going.
you want to see 1?
Yeah. No, I
Uh,
don't think I do. Stick with 3. Stick with 3. Sorry.
so here's my thought. Once all the money is consolidated, which if we've followed me through this entire thing well enough, where I can assume that the fine line between stupid and evil has been crossed, who knows? I'm not in the room with any of them. I'm not behind closed doors, so I don't know what they're talking about. I can only predict and follow where the puck is going for this. So I think there is going to be one of the 6 banks are going to be led to fail. They're going to be they're going to let fail. And billions of dollars are going to vaporize in a matter of nothing, like they were like Lehman Brothers or Bear Stearns.
Gonna disappear like a set of rims at a 50 Cent concert.
Yep.
Keep going.
Yep. And my thought, this is all tinfoil. My thought is that will be about the same time that the central bank digital currency will come out. Because once all the money is consolidated inside all of the bigger banks and it's not so spread out, it'll be way easier to get all of that money transitioned into the new form of currency that, crazy enough, will be very difficult to have a bank run on because it's completely centralized and controlled. It will come out, it will save the day, it will help all of the banks that are into this big cry now after that bank collapse, or the hypothetical big bank collapses,
The
the
potential.
potential.
Yeah.
And that's what helps them, that's what helps us get out of this next big cry.
Yeah. It's and I think you and I talked about this before once, but a long time ago, how I'm so fascinated to see how they're going to price these this new hypothetical centralized currency that may or may not be coming out anytime soon. Uh, I wonder how they're going to price it against the existing American dollar. That to me is going
I
to
think
be
it's just
fascinating.
I think it's going to be like a stable coin. It'll just be a dollar, a one worth one. But I
Mm,
think what's going to happen is since they're allowed to print and mint as many coins as they want, even if
exactly.
they print the coins, which is oddly enough, they don't have to change the price of the dollar. So what I think will happen is all of the people in the big banks that have their money in, or anywhere, whether it's dollar bills or whatever form of currency that we have, they will ask, listen, you give us your dollar, we'll give you $1.25 for every single CBDC, for every dollar that you trade in. And they will print, or they'll mint actually, uh, however many tokens that is, to be able to transition all of the people over to the new system. They will peg it. They'll revalue gold and silver just like they did in the 1970s. And I think that's the beginning of the new system for at least the digital dollar for the United
I
States.
have to be honest, and maybe you and I don't know, maybe we can talk about this off air. I don't know, you decide, but I'm kind of wondering where we maybe I think we're coming towards the end of this thing anyway here, this particular episode. I think we've had a
Yep.
great episode thus far. We're kind of coming up to the end of it. I will say, and maybe we can decide what we want to do with this, but yeah, in fact, I'll talk to you about this off air. Maybe is now a good time to wrap up? I think I think we've kind of come full circle, haven't we?
Yeah, I mean, guys, I would say thank you for listening. This is
Yeah.
just 2 people rambling. We probably have
Hmm.
4 brain cells in total, if
Hmm.
that.
Three of them are
So,
arguing
yeah, all the time. All the
all the
time.
time.
Uh, but yeah, I think this is a really good episode. I appreciate anybody that's stopping
Yeah.
by to listen. If it was interesting, if you have any comments, drop them below, leave a like, subscribe if you'd
Yeah.
like. I really appreciate it. We're going to try to do something like this every week. We try to
Hmm.
explore different topics. Uh,
Hmm.
yeah, guys, I just appreciate it. We have a lot of fun doing these talks.
We
If
do.
you want to get caught up on anything that we were talking about today, we did a lot more in-depth dive into a lot of the topics that we covered in last episode, so go check that out as well.
Right.
Uh, I guess, again, thank you guys so much for listening to this episode of the Daily Candle. I'm Higgs,
Yeah.
that's Gramps.
Yeah, I
Uh,
am Grandpa Eric.
we'll see you guys next week. Appreciate it. Love you guys.
All
Kisses.
right.